Hello everyone, this is Reggie Holmes from All Things Financial Cafe, coming to you this wonderful day, Thursday. It's about afternoon now, about lunchtime in the markets, giving you a quick update of what's going on and how the market is faring. This little quick update is for educational purposes only. Is intended to tell you what we're thinking and what we're doing, and if you choose to follow, it's surely up to you. Um, the S&P right now is trading up 10 handles at 1239. The market is trying to retrace some of the big move down, the 400 points down that we had yesterday in the markets. It's only rising because the euro's up. The euro was very oversold and needed to have a retracement. So this is nothing but a move by the euro. Also, the Italy bonds, the yield came down under 7%, which to have a rally just because something comes down slightly, I just don't see how that's possible. But looking at this is the euro chart we have up right here. We can see this daily chart. We can see the stair step that the euro is doing. We had to move up, like we talked about yesterday, the shoulder, head. We break out, we fail, we trade up underneath that support line or resistance line, uh, which became which was support that became resistance now. And you can see it traded for 1, 2, 3, 4, 5, 6, 7 days before felling yesterday. So now this tells us that we're starting another leg to the downside. And this is just the beginning of this move to the euro to the downside. So I see much more downward movement in the market to the downside at this time. We look at the move today, the euro is up. That's natural for a stock or a currency or any type of trading instrument to have a slight retracement of a huge move down. Yesterday was a huge move down on the euro over, I believe, the high of this was 138.53. It closed at one, so almost 300 pips in one day. So that's huge. So it's not surprising to have a move back up today, slightly. So we'll see how it closes. I will put a target at this either at support level, which was 136.57, or I will go to the middle of the big candle where we probably will have to go inside the chart to get the actual number. But the middle of the big candle, maybe above the 5 moving average, which was 137, as an actual resistance area. If it breaks there, it has a good chance to go back and retest the highs of the head and shoulder, where it broke resistance and then broke back down to create a new resistance. Um, that will be an area that could be alarming because that could mean the euro is going back higher. But as long as these indicators look the way they look, as we can see, our MACD is turning over, which is telling us that there's momentum to the downside here. And if these lines cross the zero line, which they are attempting to do now, that could spell some danger and is coming in the future. So we keep an eye and monitor this closely. And if this does break down, our target is this low of 132 as the first target. If things start to get worse in the news, which we are expecting, doesn't mean it has to. The euro could start plunging down a lot further right now. But let's put a target of the 132 area, or this low here, which is 131.46, as a target area, and let's go from there. If that does happen, that means the market is going to have a move down that'll take you back to 1150, maybe even a low of 1085, 1075 that we had back in early October. So there's a very good chance that we can see this low tested again very soon, or maybe right here at the 1150, which is around zeros area. We could see that very well tested in probably the next week or two. I can't see past our time horizon going past the next week or two. If it doesn't happen, there's a good chance we sustain this rally and we keep moving up. You can see the S&P is holding at the 50-day moving average of 1219. It's trading right above it. The low today was 1227. The low yesterday was 1226. That 50-day moving average is sitting right at that 1219, 1220 area. So we are 18 points off, which can very well be taken out very quickly. So I still believe that there's a lot of big boys buying here. They like to buy the dips. I believe this dip right here could be a painful one. I believe buying a dip worked for the last 4 months, buying each dip. But I think this one, the way the charts look and the way they are set up, could turn out to be a nasty move to the downside, or at least temporarily. And some people are going to get stopped out pretty fast. So that's just my theory, based on what the chart is telling me. We can see that there's a good possibility that we hold, because we were below the 50 and they kept using it as a resistance. We got back above the 50 and you see we're using it as a support. So that's something to keep an eye on too. But in that same time, we are making lower highs, which is alarming to me. This could continue. Even if we try to move back up, we might tag the moving average line again and then fell again. So this is just something to be alarmed about and keep an eye on. Plus, our MACD, which is down here, has a lot more room to fall than it did over here. It has turned and crossed over from where over here it did not cross. It just started to cross. Here we actually crossed, which is a sell signal on the MACD. And our world MACD is king whenever we have any type of momentum. So we paid very close attention to the MACD, especially where it's actually the level that is at and what is happening with the MACD. Stochastics, overbought, oversold indicators. In this case, still are very good things, useful tools. We can see they still have room to the downside. So we said at this point at lunchtime right now, looking to see this market maybe attempt to rally a little higher going into the close, but we look for this market to go lower in the next week. We don't see a lot of great things right now, not only in the marketplace, but just in the economy and the news that's coming out and the things that are coming ahead. So we don't suggest being long in the market right now. We suggest you either being flat or have some shorts to the downside, maybe on the market. I know one trade that we like is the Qs to the downside, January 55 put. We also like a FXE, which is a short on the euro. You can short the euro. You can go long term, short term. We believe the euro, like we said yesterday, is going to eventually disappear or be transformed into something else. So we like all those, and we're looking for a great move coming in this market soon, and we believe it could be just as bad as 2008. Can't tell you the time frame, but I can tell you that the markets are setting up for it, and the market is ready to hammer this market when the news hits. So, not to be the doomsday or get you down, but there's money to be made to the downside. So let's go get it. And this is Reggie Holmes from All Things Financial Cafe. Happy trading, and I will talk to you later.